Ladies and gentlemen, welcome back to another episode of TA with MK, and today we've got a very special treat for you. We've got our first episode of Monday Market Brawl here on MME, or better known as Market Makers Entertainment. In corner 1, we've got the phony balonies, and in corner 2, we've got the bare minimums. Bulls have the patterns in their court, the low time frame indicators, as well as many of the top analysts believing the bottom is in fact in. The bears, on the other hand, well, they've got the Fed, and that's enough said. So what's it gonna be? To the moon to celebrate, or to hell to capitulate? All I can say is I cannot wait. So without further ado, let's get ready to FOMO! Let's go. It's TA with MK. It's TA with MK. First, we'll start out just with the news that's left in July. Now, this could be a coin flip that could go either way. I would definitely say it favors the bad news bears, or as we called them in the intro, the bare minimums. The reason I say it would favor them is anytime that we're expecting rate hikes or things that could negatively influence the market, well, we kind of have to expect that to favor the bears, right? However, the reason I say it could be a coin flip is often these things are already priced in ahead of time, so this most recent pullback we're seeing might be the pullback that is in anticipation of this rate hike that should be being announced on the 27th or Wednesday here in the United States. But here we've got the important events left in July. The 27th over here, I show that we have the FOMC meeting. That would be Wednesday. The potential, I put potential just, for a little bit of hopium, but of course we know that it's just inevitable. But a potential interest rate hike will be announced. Now, the Fed expects it to be 50 or 75 basis points. The previous month, this last month was 75 basis points. The one before that was 50. Market expects at least 75, and I believe that's more or less what would be priced in, but it could go potentially as high as 100 basis points. And because the market's reacted so well since the previous 75, that's why there has been this recent expectation that they could go as high as 100. Because, anytime the market looks like it's reacting to something okay, they figure, hey, let's just kick them right straight in the gonads even harder than we did, because apparently they think we can handle it. I guess we've shown we have, but sure would be nice if they would just let us have a happy day for once. But 28th of July, U.S. GDP numbers will be released. Previously, it was negative 1.5%, and a GDP forecast of negative growth again this quarter could lead to a recession, that big scary word recession, that would be forecasted to last at least 6 to 12 months. Next one up, I would love to think could be another quarter flip, a flip of the coin. I'd like to think that even if it is potentially favoring the bears, that maybe the bulls come in the end of the fourth quarter and throw a Hail Mary on us, and somehow it turns, into being positive for them. But this is the earning reports that are expected to come out this week, and I do believe it's anticipated that some of the major companies will again fall below expectations as far as that goes, which will move the market. But again, could go either way, but I would give a point to the bears in the short term on this, as again, it is anticipated that some of these major companies won't have the greatest, earning reports yet again. You've got companies like Visa and Microsoft expected to announce their earning reports potentially today. Alphabet, potentially tomorrow. Coca-Cola tomorrow. You go down the list a little further. You've got Amazon and Apple on Thursday. So we'll keep an eye on these. These will definitely move the market. But for now, in the short term at least, I would give a point to the bears. If there is to be any hope for our phony balonies, it's going to start right here, in my opinion, on the SPX, or the S&P 500, or, you can look at the NASDAQ 100. What I mean to say is it's going to start with traditional stocks here in the United States and how they react to these earning reports, the CPI data coming out, the Fed rate hike. How is it going to react to all of that? If you just look at the chart in itself, it's not looking too bad. We've been tracking this large falling wedge for quite some time, and some of the support and resistance. We were putting in higher lows down here. We talked about this red box in a previous video, that it'd be nice if we broke above and flipped to support. We did do that over the, before the weekend, and now here we are Monday, and it actually just closed for the day here about a half an hour ago, where I'm from, and we're still above that support. So in the short term, that would be a point for the bulls. If we were to lose this level over the next couple of days because of some of the negative news, that could easily flip to a point for the bears. In fact, that would be a huge point for the bears. If we end up back below this green box, which I previously talked about, would be okay with me if we retest it. If we fall back below that and retest it this way and start trending back down here, I think that that's going to be ugly, obviously, for stocks, which Bitcoin and crypto will follow. So in the short term, this is a point point for the bears. We are currently holding support, not by a whole heck of a lot, but I talked about in a previous video that it'd be nice, or I would at least expect us to push up here at some point to this level of resistance. Let me see if I can scroll that so you can see that a little better. It's just an area back here where we previously double bottomed and pushed higher. If we could do something to where we could flip this as support, that would also be, I'm on the 4-hour chart, that would also be, you know, messing with these 200 moving averages, the blue being the EMA, the yellow being the SMA. If we could flip those at support at some point, we talked about this weeks ago, that if the market got a little rally going, that it would make sense, or it wouldn't be beyond, you know, it wouldn't be crazy, so to speak, for it to push up to this upper trend line, which would be, you know, in confluence with this major orange zone of resistance, and that would probably be where we topped out. Do we get there? You know, we'll see. I do believe the news coming out over the next few days will affect that, so we'll give a point to the bulls for that for now. The next chart that we'll be tracking ever so closely over the next 24 hours is this ES1 of the S&P E-mini futures. The reason that we check this one so close is it trades 24/7 Monday through basically early Friday, which is something that the traditional SPX does not do. It closes at 4 p.m. Eastern time. This will trade 24/7 during the week, and so we've been tracking this one to time more or less the after hour Bitcoin moves, right? We've got this large falling wedge that we've been in, I discussed in a previous video, and we finally had a break to the upside of this, and we're trying to flip my breakout level as support. Will it hold? We shall see. If it doesn't hold, that's not the end of the day. It could come back down here kind of to this intersection at about, what, 38.20, and retest that as support, which would also be retesting the top trend line, and then push higher. That would be in confluence with the previous chart where maybe the SPX comes back down to that green box we spoke about. But I'll be watching this really closely, because if this can, hold as support and start trending this way, then we'd expect it to at least go up here to this next level that I have marked with a horizontal line at about 41.20, and Bitcoin and crypto would, of course, by association, follow that. So we won't add a point to the bulls because it's essentially the same chart as the SPX, just one that goes 24/7, but we will be watching this one for clues. And finally, that brings us to the Bitcoin chart. Now we're going to start on the 4-hour chart, which I do believe favors the bulls. We're going to give them a point for this one, and I'm going to tell you why. We have a few reasons. We are above this previous level, the breakout level that would have been where we were being held back once, twice. Now this was a little bull trap here, but eventually we came down, we broke it, and we flipped this kind of zone here as support. When I say zone, I mean the price between about 21,500, which we most recently just retested, and about 21,800. That's the key level to me, especially 21,500, that we need to hold as support. And right now we're in this falling wedge, and we are holding it as support. That would be one bullish thing that's, good to see. Also, if you kind of double tap here and look down here on the 4-hour indicators, the stochastic RSI is, pointed to the upside and looks like it's getting ready to leave the oversold area. You also have on the money flow index a bit of bullish divergence. It's been curving up as price action's been curving down. Now the regular RSI doesn't have any bullish divergence yet, and so that's a little concerning, but I would imagine that if price action goes back up and touches this top trend line one more time, and potentially comes back down and flips this area as support, I think you would start to see some divergences being created. There are some on the smaller time frames. We're not going to go over that in the video. I care more about these larger time frames, but we'll give one to the bulls here as the shorter time frame. At least in this case, the 4-hour indicators are starting to flip bullish. It is currently holding support between 21,500 and 21,800. What we really want to see to get even more bullish is for this to break out of this falling wedge at some point and flip this green area that I previously had as support. Looks like I need to change that to red because, hey, it's now resistance. I like to use red as resistance, green as support. We need to break that level again back above about 22,500 to maybe even 22,750. Flip it as support, and then maybe take one more run back up here to that 24K level. So point for the bulls right there. Next up, we've got the Bitcoin daily chart, and this one should be pretty obvious, but it has to favor the bears. Definitely a point to the bears. Reason being is we've been in this big, large rising channel, or as many would say, a bear flag, because you had this pull here, a bear flag just looks like an upside down flag, and that is a bearish pattern with a higher percentage likelihood of breaking to the downside. Now it did break to the upside back here on the 19th of July, and I think everybody got pretty bullish. That was awesome to see. And we just ended up not flipping that 23K level or 22,750 as support. We lost it. And And any move we see to the upside right now, until we're able to flip that zone back as support, has to favor the bears, as it could just be a bearish retest of the underside of this flag, which could then see price action go all the way back down to the bottom of the pattern. So that favors the bears. And if you look at the indicators on the daily chart, until the lower time frames can change this also favors the bears. You're looking at the stochastic specifically here. It's trying to cross back into the purple and leave the overbought areas, which previously I've marked on the chart. Each time it's done that hasn't been great. Here it did it back on the end of June. You saw a 6.5% pullback. Some of the pullback had already happened, but that was the remaining of the pullback. You saw 9% after this cross back down into purple back in July 10th or 11th, and right now we're trying to confirm that. The lower time frames can change that. If we regain $23,000 or $22,750 with a daily closure, yes, you're going to see this start to curve back up and get back up in this area, which is overbought, but it can stay up here for an extended period of time, and we can see Bitcoin push higher, to 24, maybe even 25K. But in the short to midterm, until that happens, pressure remains to the downside, so that would definitely be a point awarded to the bears. And the final thought that I have for today's video is nothing to do with bears or bulls. It's just mainly to do with altcoins in general. This is the Bitcoin dominance chart. We're zoomed into the 1 hour, and I just wanted to mention, no matter what happens over the next 24 to 48 hours or the remainder of this week, as we wait for inflation and all that news to come out and earnings and so on, keep an eye on this Bitcoin dominance chart, because Bitcoin, historically, whenever the dominance chart reaches around 40%, you're better off being in a Bitcoin position rather than an altcoin position, because Bitcoin dominance historically likes to bounce from around 40 to 42%. These are levels where it just historically has always bounced, which just means more attention is going to be in Bitcoin. So even if Bitcoin does decide to break higher, as we've talked about for the bulls, this could mean, if this trends higher along with it, which is trying to put in a double bottom here or an Adam and Eve type pattern, right? We've talked about that pattern previously on the channel. Anytime this is trending higher, it just means that more attention is on Bitcoin. It doesn't necessarily mean it's bad for altcoins. It just means you'd be better off being in Bitcoin than the majority of major altcoins. So just kind of keep that in mind, because the flip side of that, if this trends higher, which it looks like it wants to do, and Bitcoin's breaking down, that just means money is going to be flowing out of altcoins faster than Bitcoin, and that's going to be, could lead to a pretty big pullback for the altcoin. So just keep a close eye on that. And it looks like the victory for this week's Monday night brawl on MME is going to have to go to the bears. Looks like in the short term, the ball is in their court, so to speak, as we kind of wait for the news to come out and see how the market reacts to that. Things are pointing to definitely some consolidation or potentially some, downside, as we wait to see if the bulls can then recover, rebound, and, maybe make this a better fight going forward. And if you guys are liking the content, as always, please remember to like and subscribe. We'll catch you tomorrow. It's